What's good, YouTube? It's your boy William coming back with another update video for today, Friday, September 17th. And as you guys can clearly see, today was a very red day. Red is an understatement for today. More like blood red, to be honest. A lot of things on sale today. Big names too. Google, Apple, Microsoft, Facebook, Visa, Amazon, Pfizer, Apple, literally, you name it. Today it's on sale, ever with exception to maybe a couple. Toyota Motor Company, Tesla, Disney, Netflix, staples that no matter what happens in the market, people are going to keep using, right? But anything product related, Nvidia, look at this, Nvidia, Adobe, man. Intuit, man, there's a lot of red today, blood red in the market today. But again, it just means a lot of things on sale. In the Russell 2000, as we see here for our specific indice, very mixed bag. Today's video, I'm actually a little bit excited. I'm not very happy, obviously, with the chart for AMC, as I'm sure you guys can already expect. We had expectations for a different kind of week. There was a lot of hype around this week. We started the week with almost 160,000 calls in the money. So to see that dwindle down, like, it's asinine. But there's an explanation for it at the same token, right? However, there are some things brewing in the market you guys need to know about and need to understand what's happening. Because again, it helps you better strategize how you're going to use your money specifically. And at the end of today's video, I'm going to throw you guys some plays that I bought into today, just because I literally could not resist the deals that were popping up as things are going on sale. As I've always told you guys from the start of making my videos, red is not bad, red is good. Those are sale days. Those are the days you want to spend money. Green days are the days you want to sell and cash in the money you make, which hopefully with these plays I will be doing that, and I will be putting it on full display just to show how it is specifically I like to trade, especially what's going on now with a lot of concerns about inflation and interest and this whole damn thing coming out of China and Evergrande. Like, I'm sick of hearing about it. I'm sick of hearing about the Chinese economy, to be honest with you. Like, I don't care what happens there. Like, I don't. But at the same token, I'm not an idiot at the same time, They're the second biggest world market, or second biggest economy in the global market. So anything bad that happens there can have a negative or a secondary effect, for example, to us, the number one global market, right? Or economic market in the global market. Excuse me. Can't talk today. It's Friday. It's been a long week. It's been rough. But nonetheless, let's get into it. So, oh, whoa. Why you lock me out for? It's not nice. Let's see. You guys like my little hidden message there? Good luck for all the hackers, because you're going to need it. All right, let's get into it. So today's chart in AMC, as you guys see, we did start the day out. We had some boom candles to start the day. I was actually kind of excited. I waited though. Anybody in my text group, I waited. I didn't send the text today. Normally I send out a text like at like 6 in the morning or 5 in the morning just to piss people off, because I know they're dead ass asleep and I'm wide ass awake. But I didn't send it. I held off because I knew. I already had a feeling just from the bullshit that happened yesterday. And I'm sorry for my language, but literally I was a little heated after this nonsensical BS stairway to hell and manipulation. Like, I can't express how angry looking at that makes me, to be honest, because I don't like cheaters, number one, right? That's flat out. I don't like people that cheat. I don't like people that manipulate other people, and I don't like people being taken advantage of, man. Like, I don't like, that's not my personality, that's not my style, that's not what I do, it's not what I'm about. I'm about helping anyone who needs the help or feels that they should have the help, right? I'll always pitch in where I can and help anyone accomplish whatever they want to accomplish, as long as they're doing the work behind it too, and to see BS like this, like, just imagine if someone was brand new to the market, just got paid yesterday or had extra money saved up, and they were like, you know what, they've been talking a lot about AMC, I'm going to test it out, I'm going to try it. And they jumped in here at this $46 mark. For the most part of the day, for the first half of the day, they had a pretty good damn day. Like, you made $2 for every share that you owned. So you got up to 48.69. You were probably cloud nine thinking, oh man, now I see what they're talking about, excited. And then this garbage happens. Because this is garbage. This is manipulation. We're going to call it for what it is. We're not going to let it go. Ain't nobody selling. Kenny can kiss my ass, because not one single ape is going to sell a share until he pays up. Him and all the rest of the shorts. Mark my words, they will pay. because every time they do things like this, it just makes us more and more angry. And we have numbers, which is something they're failing to remember, or maybe they just don't care. Maybe they don't care if they have to, at the end of the year, report to their investors that they took major losses the entirety of 2021. Whatever. But just imagine someone that jumped into the market, invested, and then they had to go through this. Well, today, obviously, after something like that, you have a lot lower expectations, right? We did meet our point of resistance or support here at 45.07. However, we broke straight through that, tried to consolidate on the bottom side of that line, held it for the majority of the part of the day up until the last quarter, and then as you see here, broke away. In the last hour, we had a big push back up to it, but then sold off clearly, right? Yesterday, in yesterday's video, I talked something about max pain theory, right? And price pinning, where you pin the price of a stock and try to bring as many calls that are in the money out of the money, right? Why? Because that's going to give those people the maximum amount of loss. Well, specifically, if you ever go to Swaggy Stocks, and again, I'll leave this in the comments of my video below, they have a max pain theory calculator, right? And as you can see here, this was up as of yesterday, they had 41 or 42, or actually here, max pain $44. Well, what did we end at today? 44.20. Funny how that works. We went from 160,000 calls in the money to start Monday to now 53,994 calls expiring in the money today, the 17th. So as you can imagine, essentially 100,000 calls, which cost various amounts of money, as you guys have seen. We show these strikes all the time. Just to give you a quick idea, something in the money, these were costing, well, they were 1 cent now, but essentially these could have been in the thousands if they bought them months ago or weeks ago. It depends. There was literally different price points, but the point is 100,000 of those shares, or essentially option contracts, expired worthless today, which means those people took losses unless they rolled them or planned ahead. You know, that's why options are considered very, very high risk, because nothing's a guarantee in an option. You don't actually own the share, you own control of the shares, but it's just how you choose to play with a strategy. You're going to see here in a minute how I play, especially when the market gets really volatile, very mixed bag, when you don't really know what's going to happen next. And it's kind of, essentially kind of when the market's kind of scared is where you want to play, kind of in this position, right, that I'm about to show you. But this is the chart for AMC. It is what it is. We live on to fight another week. We'll see what next week has in store for us. Again, as you saw from the video earlier this week, that's another $2.5 million down the drain, Kenny. Just throwing money away. You could have given that money to me. I would have been more than happy to invest it and give it back to the people. Seriously, another 5 days, another 2.5 million in the trash, gone. Because again, they're paying short interest, don't forget. But nonetheless, that's AMC for the week. We will see what next week has in store for us. I did want to jump into some other opportunities that I jumped into today. Again, using unusual, I hate that I keep doing this. Using my favorite new toy, essentially app, Unusual Whales. I did get some alerts, and I saw some amazing deals that I could absolutely not turn down. So specifically, one of those is Zoom video calling, right? For those of you that have never seen Zoom on a chart, I'll show you what exactly you are looking at, because this is a monster. This thing, when the pandemic started, shot up to the moon and maybe to Jupiter even. It shot up pretty high. Specifically, I would just try to highlight this piece. This is the 1 year. I want more time. Give me more time. Let's go 5. See how far we can go. Take this back. So as you can see here, this is 2019. So 2020 March, somewhere in this vicinity here. But as you can see from this chart, this is a monster company. This share price has been as high as 588. Gone through spikes, ups and downs, but recently had a little bit of a sell-off after doing earnings. And to mind you, it beat on earnings, which means it had good reporting on its earnings. It did not have bad numbers. It beat on expectations, price per share, revenue, all of it. But today, when I was zooming or skimming through Unusual Whales, I saw a couple of calls come through, or option contracts for pretty large amounts. 47,000, 42,000, 33,000. Well, first of all, look at the share price. Underlying 287.18 is where this was at when this alerted at noon today, right? Just for these examples. But then look at these strikes: 350, 300, Look at the date, pretty close date. October 15th, 300, 300, 300, 320. Even the puts are higher than the underlying price, which tells you even people who are going to play the downside of this, a put, essentially, are expecting this to go higher, quick, relatively soon, right? So that right away instinctively gave me the instinct to go and check out some options. So I did end up picking up an option, and if you were in my text group, I did send you out a text letting you know what I did buy. Specifically, as you see here, 287.77 is the share price at the time of close today. I did end up picking up the September 24th, which is next week Friday, $300 call. I paid $165. If we're going based off historical trends, most recently, let's just say it decided to go back up to this area, right? 348, right? Potentially, right? Again, on a run up, because we have to look at the RSI. See how it's oversold into the red? I'll try to zoom in more. See how we sat under. Let's do it this way, so you can get the emphasis of what I'm trying to explain. See where the RSI, work with me computer. See where the RSI is in the red on the 1 day, 1 year chart? Well, being in the red, we know it's oversold. Well, what happens when something touches oversold? Well, look at historical data. Oversold goes all the way to overbought. Oversold goes all the way close to overbought or up to overbought. So, being that this is Zoom video, being that COVID is still not over, being that most companies are still in a work from home status until January of 2022, that tells me Zoom is still going to get used, because you still got to have meetings, you still got to communicate with your employees, you still have to be able to figure out a workaround outside of being in an office setting. So, being oversold, MACD in a sell period still, I went looking for calls, and let me tell you, I found some pretty good deals. Specifically for the September 24th, went out to the $300 strike. I played under what most of the calls were alerting for in unusual whales. Again, I love that tool. If you have never played with it, please try it. I promise you, the amount of data that it gives you will change your trading life forever. But as you see here, $300 strike. They were going at the time for 150. I think I got them for 152. So using our options calculator, we can calculate and map out. We'll just leave it at 375, 291 to 375. Let's put that range between now and September 24th to see what our potential gain could be, right? So essentially, I'm saying I'm risking $165 for control of 100 shares of Zoom in this volatile market, right? However, this stock specifically wasn't oversold. Now, let's just say it doesn't go all the way to 375, but it trends at 333. I like threes, three matching numbers. I like it. That essentially risking $165 in this market where everything is up and down, red days, mixed green days. I would have a potential payout of $3,139 on this play. Now, Zoom is not going to go bankrupt anytime soon. Again, COVID is still going on. People are still in work from home status, and offices are declaring they aren't going to return until January 22 for the most part. So those were the variables that gave me conviction, and I risked $165 for a potential payout. Let's say it doesn't go that high. Let's say it only goes back up to 303. I like that number. I still would make $572. So as you can see, it's risk and reward in the stock market. How much are you willing to risk versus how much are you willing to gain in that potential? How am I being convicted? By looking at other order history from other institutional investors who are investing large amounts of money in a price they feel this stock can get to based on historical information from a chart, which we can see clearly it's been in this area a lot. It has a big following in this area. It's when it ever gotten this low before, what does it do? Go straight back up. Again, the history of the chart will show you that, and that's why it's important to understand charts. See, we started down here kind of where we are now. Big gap up to the top side. That only took a day. This was a day gap up. 1 day. So again, there's opportunity to make money as far as I can see it. So I was a buyer in this, and that was my first trade that I made, again, in an option. Second trade that I bought into was Blink. Blink is an EV charging company. I posted this on my Instagram as well. Again, similar scenario. I was watching the flow, watching option contracts that get bought up, large amounts. Number one, $3.5 million for call premium, 2.3 for puts. So you already know it's kind of evenly split. However, let's take a look. $29.95 underlying stock price at the time when this was purchased. So I started seeing puts, once again, higher than the underlying price, which means even if they're playing the downside, they're anticipating it's going to go to the upside. Otherwise, why would they Thank you. Why would they be buying puts higher than what the underlying price is? If you're wanting to play the downside, you would want to play this under 29 or 28, 27, 26. But no, you see even 45, 40, 41. A lot of strikes started coming in at higher prices than what the underlying price was at today. For large amounts, 274,000, 84, 35, you get the idea. So I went looking at the chart, same scenario, kind of like with Zoom. Blink. EV charging company. Again, remember, in the United States, EV or green energy is popular right now. A lot of companies are switching. A lot of companies are converting. They just signed an infrastructure bill with $3 trillion dedicated just to, I believe, EV charging stations. Blink is actually here locally where I live. There are Blink charging stations already in existence. So I know that they're valid. It's a real company. They have a real product. They essentially stand behind it. So whenever I'm trading, I like to look, I've always told you guys, when in doubt, zoom out. I went out to the weekly chart specifically. Now, what do you see right away? You see this huge triangle, right? This is a bull pennant, essentially, formation. I'm not going to take credit for finding this. I actually went to Twitter as well, snooping. Someone had pointed this out, and that's when I noticed it as well, once it had been pointed out. And I started noticing higher lows consistently in this triangle, touching respecting the trend line on both top side and bottom side, which told me, okay, so this has potential to be true. Number one. Number two, since 2021 has started, we have relatively stayed above this support line of 30.65, right? Now that the infrastructure bill is signed, EV is green. Two, look at the MACD. We're still in a selling period, getting ready to converge. Our RSI is neutral at 44. So that was conviction piece number three. Plus unusual whales turned me into a buyer when I saw the prices for how good of a deal I could get on option contracts, which I did. On this one, I went a little bit heavier. Specifically, for Blink, I went for the October 15th, as most of the flow was showing that. If I could get this to reload, it would make my life so much happier. How do I reset this? Okay, we'll do this. We'll go analytics, and then we'll go back to float. And again, it's gonna do the same thing. Okay, here we go. Let's try it this time. Again. So, BLNK. So, as I was saying, you see a lot of contracts being bought for higher prices, even on the put side, higher than the underlying price, which made me super bullish. When I went looking at the option contracts, you could pick up these specific contracts, essentially $10 per option. So essentially I was risking $10. Now let's calculate out. So based on what the history of the stock has done, the high is 60, the low is, we know, doesn't usually trend below 30. So I went with that range specifically just to see what my risk reward potential is. So let's just say it doesn't hit. Like, I always don't like to give the highest, right? Because you don't always guarantee you're going to hit the highest. I'm not saying tomorrow Blink will hit 65, but I do have a feeling it is going to go up based on puts and calls being bought for higher strikes than what the price is at today. So with that being said, let's just say 45. That's risking $20 to make 610. I'm literally taking, I'll throw away $20 if I can ensure I'll find $610. So to me, that wasn't a big risk on my on my finances. I'm more than happy to make 610, especially in this market right now where it's very mixed bag. You don't necessarily know what's coming next. Plus you got this huge Evergrande story coming out of China that could potentially have negative side effects to us. Even though we did have really good CPI data, that's Consumer Price Index for those that don't know, that releases every month. It gives you the inflation rates for specific items that consumers buy every day. Rentals, airline tickets, cars. That data was pretty good. If you want, I can make a video on that this weekend to give you guys an idea of what that looks like. But again, this was play number 2. I did also go ahead and post this on my IG. And then play number 3, fuel cell. Now I'll explain fuel cell in a minute. So going back to the flow, again, this tool has paid for itself 10 times over since I've gotten it. And as you can tell, I won't shut up about it because I literally love this tool. But fuel cell. No, not feel. Apple, you're not being nice today. Come on, making me look bad on my video. Anyways, underlying price 655. Look, same scenario. You start seeing puts for higher strike prices than what the underlying price is. If you start looking at the money, We can do this by premium. We'll go 10,000 or higher. And you see there are still lots of contracts, both calls and puts. Look at this, $24 for October 15th, $20 October 15th. Even on the calls, it's on the lower side. Look at these deltas, 95, 76, 96, $97 for every dollar the stock goes up. I literally was seeing this come through the flow, and I could not resist. I went looking for the prices, and what did I find again? A bargain, once again. So, let's look at this. October 15th. And I went with the $8 call. So I was paying $30 for these. I picked up two, so I risked $58. Going back to the historical chart, F-sell. Excuse my music. It's been a relatively good day. High 29, currently. Low of 6. However, if you go back in this chart history, this chart has some history, let me tell you. This company at one point in time was super, super high. Going to the weekly chart, go back further, time frame, let's go 10. As you can see, this company has history. It's gone all the way as high as 682. Recently, again, that's not equivalent or in play currently, but I did want to point something else out. For this, I'm going to change the style of my candles, because when I'm hunting for triangles, I always hunt under Hinki Ashi. So why? Because it gives you trends more clearly visible. You can clearly see this is a downtrend, right? First green candle. Look at the MACD, about to converge during a selling period. Look at the RSI pointing upward at 42. That tells you there's momentum coming that's going to start pushing the stock up. How can I verify it? Look at the last time it was about to converge. Had this huge push up all the way up to $29. Look where the RSI was, right at 44, almost perfectly on the dot. So I felt this was a good buying opportunity. That gave me conviction, plus seeing the flow is what made me pull the trigger. When I went looking at these prices, once again, it was irresistible. How could you not risk $58 in this market? Why would I go buy 100 shares of fuel cell? That's $655 when I can simply risk 58. Now, we'll just leave it a full number of 55. As you can tell, I like matching numbers. So again, same scenario. We're not going to play the high. We're not going to play the lowest. But let's just say fuel cell, for example, does hit $33. My two contracts controlling 200 shares of fuel cell would essentially return me $4,942. How could you not possibly do that or want to do that at a risk of $58? Simple. Options are simple. Yes, they can be complex. Yes, they can be super risky. But in the market we're in, look at the market you're playing in. You're playing, number one, with people who manipulate stocks when you're playing in short squeeze plays, AMC. Two, it's really volatile right now. It's mixed. People don't really know what's happening. And I've told you guys before, you have to control your emotions, because if you don't, you make irrational decisions. As you can see, institutional investors with a lot of money, they get scared or squeamish easily, especially with fears of a company in China, the second biggest economy, potentially crashing. You have inflation fears here. There's just a lot of things happening in the market. It's not a really good time to go long or buying up a lot of shares of stock outside of maybe AMC or GME, because those have different catalysts. Those you have to buy and hold for that to squeeze. Me being me, I'm not going to put my money at risk or potentially have it lost or washed out or tied up for long amounts of time. But for October 15th, I'll be willing to risk $58 to make potentially $4,000. Let's just say it doesn't go that high. Let's say it only goes to 22. Again, same scenario. That's $2,800. 15? Say it just gets a $9 push. That's $1,600 that you didn't have before. To me, that's a no-brainer, right? I'll do that every day, all day if I have to. But again, I think you guys get the point. This is just a little bit giving you a little bit of an idea of how I like to trade, especially when the max is a little big, when the bag is a little mixed, excuse me, and you don't really know what you're going to pull out. But nonetheless, if you have any questions or comments about it, please leave them down below. I'll be happy to address them. Don't forget, you can always follow me on IG and or Twitter. And as always, guys, if you subscribe to the channel, I will always greatly appreciate that, as it does help with the channel's growth. Until next time, guys, I'll catch you in the next one.